Mr. Chokkalingam, G. Chokkalingam Johnson, with his sense of how the markets are looking right now. Mr. Chokkalingam, good having you. What's your sense, Mr. Chokkalingam? It's essentially the rupee, the domestic factor, which is the main concern, because globally the markets are doing okay. You think it has got enough weight to pull the markets down, never mind the fact that Europe may just about be stable?
I doubt whether rupee can depreciate further substantially and then leading to fall in the market. Just a couple of factors, If you look at the fundamental development in the last 1 month or so, during which time the rupee has cracked a lot, I could not come across any fundamental negative development concerning the rupee. Whether you take FDI inflow, which is up by 55%, or FII, still they stay invested. In the current calendar year, they have brought in $8.5 billion. And if you look at export for FY12, that was above the targeted level. Or you look at NRI remittances, India received the highest remittances, and it is likely to be receiving that kind of flow in current calendar year as well. Even the NRI deposits have tripled. So what doing the damage is more do with the perception on currency, and also partly the developments in Europe, which has impacted not only INR, also South African and Brazilian currencies. So I firmly believe that fundamentally speaking, beyond 54 it is unjustifiable, and the short-term perception we have seen happening in crude oil, gold, silver in the past, and but finally in the medium to long term the fundamentals prevail. And also finally RBI still left with around $20 billion out of $78 billion they purchased around 40 rupees in 2008. I think that would still give some cushion to fight the current losing battle. So I have not given up my optimism. I still remain hopeful of recovery in the market. In light of what's happening to the index and to specific names as well, what about banking? Because Bank Nifty is really gone in a tizzy, 9225 now. What about the banking names? Do you believe that they still remain or a space which you can essentially get out of your positions? It would definitely once again perform well. I mean, if you have seen last 4 years, the banking sector never failed except in 2008. Even if you see the March quarter results, most of the private sector banks have posted anywhere around 30-35% growth in the profit. We still remain very optimistic on private sector banks, and we are firm that they would all rebound, because what has happened in the last 1 month to banking Nifty or banking stock is more to do with the negative news flows and perception and global cues, but nothing to do with the basic fundamentals of the private sector banks. I do agree, several PSU banks have concerns on the net NPA and the restructuring of accounts, but that is not the true in the case of most of the private sector banks.
There has been institutional interest building in IT stocks or export-oriented companies on the back of what's happening with the currency. Is that a trade or a conviction call that you're also following?
No, we stay away from most of the IT major stocks. Rather, we focus on certain select mid-cap stocks where we think there could be acquisition game being played out. So tactically, we are after certain select mid-cap stocks where the promoter's holding is very low, because the organic growth is now limited for IT majors. So logically speaking, there would be a possibility of large IT companies going in for inorganic route to grow by acquiring these mid-cap companies, like what happened to Patni Computers. So otherwise, we are bearish on IT sector and we stay away from most of the IT companies. What about the importing companies, Mr. Chokkalingam? To your mind, any of these that get impacted majorly? I mean, a VIP, we know, imports a large portion of its raw materials, so that will definitely get impacted. Anything else that you would believe would feel the pinch? Well, definitely. I mean, the rupee has depreciated by 19% in the last 1.5 years. So obviously, we have been avoiding most of the import substitute companies. Rather, we are going for import substitute companies as well as export companies. So there are many such companies available in the mid-cap space. In fact, fortunately, some of our exposure to such companies has helped us to mitigate the risk arising from the recent fall in the rupee as well as in the market. Okay, so that's the call really out there. You do not believe, Mr. Chokkalingam, that you've spoken about IT, any of the pharma names, etc., that would benefit from this, or is this essentially all-round weakness that would probably impact all of the companies?
The rupee weakness I'm talking about.
No, we have optimistic view on pharma on both accounts, being a defensive nature and also the rupee weakness. So we have recommended and bought for our clients stocks like Dr. Reddy Labs, Lupin, Unichem Pharma. So these are the three stocks who have been bullish, and reasonably in relative terms they have been doing quite well.